When it comes to investing, short-term trends always seem to grab the headlines. You've probably seen the stories, cryptos that skyrocket overnight, a meme stock that triples in a week, or some get-rich-quick scheme promising instant results. They sound exciting, but here's the truth. Most of those stories don't end well, and real wealth is not built overnight. Hi, I'm Adam Bergman, tax attorney and founder of IRA Financial. For the past 15 years, I've helped thousands of clients build wealth by thinking long-term, not chasing fads. Today, I want to share the best long-term investment strategies, the ones that can actually carry you to financial freedom. So why does long-term matter so much? It comes down to one word: compounding. Albert Einstein called it the eighth wonder of the world. When you reinvest your earnings, your money doesn't just grow, it grows on itself, year after year, decade after decade. A dollar that compounds for 30 years doesn't just double or triple, it can multiply many times over. That's why people who start early and stay consistent almost always outperform those who try to time the market. Let's put numbers on it. Imagine you invest $7,000 a year into your IRA starting today, earning an average of 8% annually. After 30 years, over $740,000. That is the power of compounding and consistency. And remember, that example didn't start with millions. It started with consistent contributions and time. That is why retirement accounts are one of the most powerful long-term strategies you can use. Whether it's a traditional IRA or a Roth IRA, the combination of tax advantages and compounding creates a snowball effect that's really hard to beat. A traditional IRA gives you tax-deferred growth. You don't pay taxes until you withdraw in retirement. A Roth IRA goes even further. You pay taxes up front, then your growth and withdrawals in retirement are completely tax-free. For younger investors, especially a Roth IRA can be one of the smartest long-term tools available. Dividend-paying stocks are another strategy many investors underestimate. These stocks don't just appreciate in value, they also pay regular dividends, which you can reinvest to accelerate compounding. Imagine a portfolio where a modest allocation to dividend stocks generates steady income, even during market ups and downs. Over decades, those reinvested dividends can turn a relatively small initial investment into a meaningful portion of your retirement savings. One client I worked with began reinvesting dividends from a diversified stock portfolio, and over 20 years saw their account grow substantially faster than if they had relied on price appreciation alone. The key here is patience and consistency. Dividends reward investors who think long term. Now, let's talk about alternative assets, which you can access through a self-directed IRA or a solo 401k. These investments go beyond traditional Wall Street options and give you additional ways to build wealth while also diversifying risk. Real estate remains one of the most popular alternatives. Even a modest property, when held over time, can generate steady rental income while appreciating in value. For example, a client used a self-directed IRA to co-invest in a small rental property. Over 15 years, the property produced consistent cash flow and appreciated significantly, all within a tax-advantaged account. That combination, income plus appreciation, illustrates why real estate has long been a wealth-building cornerstone. Private lending is another alternative investment strategy. You can use your self-directed IRA to lend to vetted borrowers, earning interest that flows directly into your account without tax. For example, a $25,000 IRA loan to a small borrower at a fixed interest rate over a decade, that interest compounded, tax-deferred, growing the account steadily without exposure to market volatility. The principle here is simple. Your IRA acts as a lender, earning reliable returns while keeping the investment tax advantaged. Precious metals like gold and silver, can serve as a great hedge against inflation and market swings. They don't generate income like stocks or lending, but they protect wealth and preserve purchasing power over the long term. Allocating a portion of the IRA to metals, balancing more liquid or growth-oriented investments can help stabilize overall portfolio performance during periods of economic uncertainty. Cryptos. It's another option that can fit into a long-term strategy, though it requires a thoughtful approach. Using a self-directed IRA, you can invest in approved digital assets. While volatile, a disciplined allocation to crypto can provide high growth potential over time. Think of it as one part of a diversified strategy, not your entire portfolio, but a portion that complements traditional stocks, real estate, and other alternatives. Of course, diversification is critical across all these options. Each asset class has unique risks and benefits, and the goal is to balance them so your overall portfolio can grow steadily while weathering volatility. Even within a self-directed IRA, spreading your investments across multiple asset types, stocks, dividends, real estate, precious metals, cryptos, creates multiple paths for growth while reducing reliance on any single market or investment type. So how do you put this into practice? First, commit to consistent contributions. Max out your IRA or 401k where possible. Next, choose a combination of asset classes that align with your knowledge, interests, and comfort level. Finally, think in decades, please, not days. Long-term strategies require patience, but the payoff comes when you give compounding the time it needs to work. So here's the bottom line. Real wealth is built on consistency, compounding, and diversification, not chasing short-term trends. By leveraging retirement accounts, dividend-paying stocks, and alternative assets like real estate, private lending, precious metals, and cryptos, you can create a portfolio that grows steadily over decades. Each choice reinforces the other, giving your IRA or 401k multiple avenues to build wealth. If you found this video helpful, please subscribe to our channel. We post new content each week to help you take control of your retirement accounts, invest wisely, and build long-term financial security. Thank you so much for watching.